Okay, practically speaking, previous slide I went on about the VAT categories, the VAT 15% that we need to take into account because we either need to pay it over to SARS or we need to claim it back from them. How do we work? How do we work with this? Okay, so you get three different, I'm going to say, amounts when you work with a VAT calculation or with a figure with VAT. You get the figure with VAT in. Okay, and that's the VAT inclusive amount. So let's work with a round figure of something like 230. If that's got VAT in, your VAT will be 30 Rand. Your VAT exclusive amount will be 200. Okay, so you can see the relationship between the 200, the 30, and the 230. So the ones that amount without VAT, so VAT exclusive, we refer to that as 100%. The VAT is 15%, so the amount with VAT in is 115%. Okay, so that 115, 115, we work with quite a lot. Okay, so you should be able to know, if I tell you the amount is VAT exclusive, you should be able to tell me, okay, so that's 100%. That's without VAT. I still need to add VAT. If I tell you it's the VAT inclusive amount, you need to be able to tell me, okay, so I need to actually remove the VAT. So sometimes I'll also refer to it as adding VAT on or taking VAT off, okay, depending which of these three figures you have. There's an activity in your textbook that I'm sure your lecturer will give you to do that's very good to illustrate the relevance between these three figures and the relationship between exclusive, inclusive, and VAT. Okay, you need to know that they form one calculation. Okay, so 115, sorry, equals 15 and 100. Okay, so please work with these three numbers as a relationship to each other and not just separately. Okay, they do connect, so they are part of, I want to say, one equation or one calculation. Okay, so the amount without VAT plus VAT equals the amount with VAT. Okay, and the amount with VAT minus VAT equals the amount without VAT. Okay, so please take time to go over the difference between VAT inclusive, VAT exclusive. Okay, so towards the right of the slide, just again some terminology. If you are given figures and they tell you that VAT is already added, that means it's VAT inclusive. It means it's 115%. Okay. Any figure that they give you without VAT is VAT exclusive, which means it's actually equal to 100%. Okay. The reason why this is relevant is because you need to know how to get from VAT exclusive to VAT inclusive. You need to know how to get from VAT inclusive to VAT exclusive and work out the VAT, obviously, because the VAT is relevant, because the VAT tells us how much we need to pay over to SARS or claim back from them, depending if it was a purchase or an income. Okay, so that is why we need to be able to play around with these 115, 15, and 100% so that we are able to say, okay, we can move ourselves from 100 to 115 or from 115 to 100 so that I'm able to work out the VAT so that I know how much I owe SARS or how much they owe me. Okay, so working out the VAT will be different because you don't always have the same value. Okay, so we sometimes have 115 Rand for 15%, sorry. We sometimes get 100%. So obviously I want to say your base value is different. So you need to know, how do you work with the 100% that is given to you or the 115 to enable you to work out, I want to say, the figure that you need. Okay, so in general, and this is more for, I think, Learning Unit 4, when you start really working with transactions, you know, that you have to journalize and book in. So a bit of a general summary. So money paid, money received, any debtors, any creditor transactions will always be booked in VAT inclusive, which means 115%. Okay, and the reason for that is because what we receive or pay, depending if it's money going in or out, and depending if it's debtors or creditors, so people that we owe or owe us, that is the total amount that we owe. And that might also then be the total amount that they pay us. So some of what we owe or pay, some of what we receive, is going to SARS. Okay, you might want to listen to this again, and I'll say it again. So we are owed 200 Rand for a service that we've performed. Some of that 200 Rand we will send to SARS, which means we'll keep maybe what, 170 or something. So that means when we then get that 200 Rand, I hope this makes sense, that 200 Rand is VAT inclusive. We are getting the money from the client plus the VAT. We are sending the VAT to SARS. Okay, so if we pay money, we also actually pay the money and the VAT. Okay, so any time we deal with money paid, received, money due, creditors, money receivable by debtors, we actually work with those figures VAT inclusive because we pay or receive that full amount. And some of that full amount we're going to send to SARS or we're going to claim back from them. Okay. So some of that then we put either into VAT input or VAT output. I'll stand still on this in a minute. I just want to finish the section on your slide. And the rest gets booked into the actual product or service or whatever we offered or bought. Okay, so used a couple of examples there. So whether it's stationery, sales, or telephone. Okay, so I'm going to stick with my numbers on the left just to illustrate this example one more time. So we have paid 230 Rand. Okay, we bought stationery. I'm going to stick with that example. So we swiped a card at Walton's, 230 Rand we paid for stationery. So we would all agree that's the amount I've paid. Okay, that goes into my bank. So I've lost 230 Rand. Okay, some of that 230 I'm going to be able to claim back from SARS. The reason why I know that I can claim back some of the 230 is because stationery is a standard rated item. So that's why your previous slide becomes important. If it was fuel, it'll be different. But because it's stationery, that's a standard rated item, it's necessary for business, necessary business expense, I can claim back 15 of the 115 of the total invoice price, which was 230. Okay, so 30 Rand goes to either VAT input or VAT output. Now, how do you know whether you use VAT input or output? If you are bringing it into your business, you have expenditures, you're buying something, it's VAT input. If you're claiming it back, it's VAT input. Okay, so any expenditures, purchases, any money that you've used or you're going to use in the future to buy things for your business attracts VAT input. Okay, because you are inputting things into your business, bringing it into your business, which means that 30 Rand from the stationery purchase, you're going to be able to claim back. So if I claim 30 Rand back from the 230 Rand invoice, what is the rest? That's what I'm saying, the rest. What is still on the invoice that's unclassified? 200 Rand. So the actual value of the stationery is 200. Okay, so I spent 230 at Walton's. 30 is VAT. 200 is stationery. Okay, that's what I meant with those two bullet points in blue. Money paid, money received, debtors or creditors. So whether I pay the 230 or whether I still owe it because I bought on account, doesn't matter. I owe Walton's 230. I paid Walton's 230. Same. Okay, that's the total amount that I owe. Of that 230, I'm going to get 30 back by putting it in the VAT column, and the rest is actually going to be classified as stationery or whatever I bought with that. It might be packing materials, it might be telephone charges. Okay, so your invoice will tell you what it is that you spent the money for. Okay, your VAT categories will tell you whether that item that's on your invoice is one of the items that you can claim back for. And remember, it has to be standard rated, otherwise you can't claim anything back. Okay, so that's why this VAT breakdown of VAT inclusive VAT and VAT exclusive is important. This example might confuse you a bit, So refer to your textbook where they also unpack this. Maybe come back to my slides for a bit of a refresher and a second time hearing this. So that's why it is relevant, because there's money that we pay, money that we owe, money that we receive, but not, I always say, not all of that we get to keep. Some of that needs to go to SARS, and that some of that is the 15% that we need to work out. But the rest also needs to be classified. So the rest of the invoice, the 200 Rand in my example, will be classified as stationery. Okay, so then quickly over to our source documents. So I just mentioned the invoice, the Walton stationery. Reminder about the source document section in your textbook. That is quite important for you to visually grasp what we are working with. Okay, also we have two methods to keep record of that. So these two sections I'm going to deal with together. So source documents, I'm going to deal with on the right hand side of the slide. Just firstly, on page 81, they deal with two different methods to keep record of your VAT in your business. Now, this has been such a popular question in assessments, and I sometimes think that students just completely miss it when they work through their textbook. So that's why I've given you an activity on these two methods. So please go and read page 81, and then you can do the activity on VC Learn. So you've got the payments basis, and you've got the invoice basis. Read the difference between the two methods and see if you can advise someone on the appropriateness of one of the methods that they want to use. Okay, so it's literally a method to keep record of your VAT. Okay, so that's what it is. You can choose one of two options, A or B. How do you want to record your VAT? Okay, so that's all I'm going to say about the two methods or the two bases to keep record of that. Okay, over to source documents. The reason why source documents is an important part of this chapter is because source documents show that. Okay, source documents show, I said in the previous learning unit 1, source documents give us the detail of a transaction that occurred. It's the paper trail. It's also then the paper trail for not only what I bought, but also if there's VAT applicable or not. Okay, so that's why source documents form a part of our learning unit 3. So they are the proof that we have a transaction. Firstly, we have a paper trail of the transaction. So yeah, I can show you, again, electronically or physically, this is what I bought. This is how I paid. This is the business's name. That's where they are registered. That is their VAT registration number, etc., etc., etc. You can read about it on page 82 and 89, exactly the requirements for different source documents. But different source documents are used for different transactions. So we get our own source documents for transactions. Not invoices, for example, aren't used for everything. Proof of payments aren't used for everything. It depends what your transaction is. But yes, your source document is the paper trail of what happened. It's important for us now because it tells us about the VAT. Okay, it gives us information about how much are we looking at in terms of VAT. So it helps us in a way with the bookkeeping of it. So what is the VAT amount? What is the VAT percentage? All of that we can find on our source documents. And you can scan through page 82 and 89 in your textbook, and you can see they actually have very nice examples of the different kinds of source documents. So you can go and just see, especially if there's ones that you've never seen before. I mean, we all use till slips regularly, and maybe you've gotten a proof of payment or a cash receipt before, but maybe there's some other ones that you haven't seen. So you can read in the textbook exactly what they're being used for and what they look like to familiarize yourself with them for the next learning unit. Okay, and then there's an activity of VC Learn, I think actually 2 activities that just, again, getting a bit more practical on the source document thing, so you don't just read over it, you can complete your own source document. The business's name is Kitchen Candy, so we're working with them quite a bit in Learning Unit 3 on VC Learn, and you are asked to complete a source document where they've made a transaction, and you can there get practical experience in terms of A, how to complete a document, and B, what information actually goes onto a source document, and how to do the VAT breakdown amounts as well. Okay, some of the source documents that you might come across in your textbook, you can see on this little diagram on your slide. Yeah, and you'll soon pick up exactly what kind of transactions attract what kind of source documents.